How we doing? I'm Ryan Mack, welcome back to Trading Guys. And normally, as you know from last week's video, I am going to start doing my fundamental weekly reviews from the new office. Lastminute.com today, we've just booked a little hospital appointment for my son, nothing major. He just keeps kind of getting trapped wind and it's making him, sore. So we need to go tomorrow, and then I've got another appointment for myself. You'll always hear me going in my bloody videos. There's nothing wrong with me, guys. I just live in Jakarta and it is polluted as fuck. So I'm finally getting sick of coughing shit up all the time, so I'm just going to go over and get my chest cleared out using like infrared and blah 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 tomorrow. So that means I'm not going to get a chance to go to the office. If anyone's ever been to Jakarta, the traffic here is absolutely insane. Like just going to the gym, which is 2 kilometers away, sometimes can take you 4.5 hours. It's fucking ridiculous. So yeah, that's why tomorrow has just become a write-off for me in the last 30 minutes. So I said, look, instead of not making the fundamental review until Tuesday or something, that's fucking ridiculous, I'm just going to do it from home just now, like I was previously doing. However, from next week I will be doing it from Monday again from the office, from the interactive TV. Also guys, the month of May, for anyone who's not a member of the Trading Guys, I will be running a 4-week masterclass. The original price is £359. I'm going to be doing it for £249, and this is the last one I'm doing this year, only because it's over 4 weeks, right? It's going to be every Sunday for 4 weeks at 1 PM UK time. This is going to be the last one I do this year, and it's because this is the only month this year where I have 4 consecutive weeks where I'm free. I'm going to be able to provide it. I've got mountains of reviews from the last time I've done it. We've got a guy, Bradley, in the group that said, Rye, I've spent £700 on a course before and it doesn't even cover a fraction of what you guys cover in here. On the 4-week intensive course that I'm going to be doing, it's literally a trading crash course masterclass where I'm going to be covering everything from complete beginners, like what is a lot, what is a spread, what is a pip, fundamentals, how do you read this, how do I actually look at that instead of just going, oh, there's a red folder today, I'm not going to trade it. This could turn out to be a fantastic trade, along with aligning information. So I'm going to teach you how to understand this as well, trading economics, which is the same thing. It's a little bit better than Forex Factory. I'm going to cover data with you and go through what all this means. I'm going to cover technical analysis with you and so many more things I'm going to cover. Let's just have a look if I've still got it here. I think it's on here. I'm going to cover supply and there we go. Look, I'm going to cover tons of shit with you here. Market structure, I'm going to cover supply. This is what do you call this again? It's the market structure in terms of longevity. As markets are going, you're in bull markets, then you're going to be in kind of stagflation, then you're going to come back down. Market cycles, that's the bloody word I was looking for. Sorry, I had a brain fart there. Market cycles is the word I'm looking for. I'm also going to be covering things like risk management. I'm going to be covering market sentiment, which is risk on, risk off. Very important for the markets. If you look at maybe 2 weeks ago, the Eurozone is totally fucked right now, right? It's shit. All the numbers are absolutely shit, right? Which means you'd be looking to sell the euro. However, if you look at the euro pairs, I'll just show you right now while we're talking about it. If you look at the euro pairs, look, they were flying. Now, people are like, how the fuck can that fly if the Eurozone is shit? Now, the Eurozone was completely shit during that time, right? And it flew. Now, that's to do with bonds. So I'm going to teach you bonds. I'm going to teach you how the bond market affects the Forex market. And the cool thing about understanding how bonds work is bonds will always move first. So the bonds will start flying 1 to 2 days before the currency itself moves, so you can get in on it, get in on the action. All right. So I'm going to be covering tons of shit with you guys from every single aspect of trading. Okay. It's going to start next week though, on the 4th of May. And that's going to be 1 PM UK time. This is the last time I'm doing it this year, so if you want to get involved, get involved. Only 249 quid. I'm going to be teaching you everything. Last thing, before we touch on the fundamentals today, it's all live. So I'm going to be doing it all live from our Discord channel right here. I'm going to be doing it live from here, okay? And I'm going to be doing it on the big screen over in the interactive screen at my office. If you have a look here, guys, I'm just going to show you. Look, here's the trading results from, sorry, I'll make it smaller, and I will put it in the middle for you. Here's trading results from the guys in our group. Look, right, just so you know, Anthony, 9 grand, 3.5 grand. Jeff, 122 quid, 316, 341. I'm sure Jeff's got, right, there's Jeff again. Look, here's all the results from our guys. All right. And we've got tons more. We've got reviews, trading course. Where do we have reviews? Let me just have a quick look. Student reviews. There we go, look. I'll make this larger so you can see it. Here are student reviews. There's Bradley. Look, mate, this Discord is the fucking trading Bible. I bought a 700 quid course and it's not even covered a smidgen of your guys' content. Golden, very happy to be on board, you know. Anthony, all right, mate, I just want to say I appreciate all the work you and Lee put into the group. It helped me loads. Still got loads of work to do, and I can get ahead of myself at times, but I felt like I achieved something decent with withdrawing 10k onto the next. Now, Anthony has a live account, not a funded prop firm, a live account, and he's just withdrawn 10k. Here you go. Withdrawal request, £10,000. All right. Bosh. So we do get real live results, guys. If you look up here, look, you can see these are student reviews as well. Okay. So, without further ado, excuse me. That's why I'm going to the doctor's tomorrow to get my bloody lungs scraped out. So as we say, let's have a look here. Make sure it's this week, because bloody last week what I did was I was reading the previous weeks instead of doing it. As you know, if you're someone who always watches my channel, you will know I always do my weekly fundamental reviews on Forex Factory. This right here is called Trading Economics. It's 100 times better than Forex Factory. That you get far more data, and the data comes out much faster as well. Okay. However, the reason why I don't do my reviews on here is because, look, if I go to select, where are we? Hold on. If I select countries, look at that. You know, it's an absolute pain in the arse clicking all of these bloody things. Let's get rid of that. However, if I come across the Forex Factory, all I have to do is hit filter, and it's dead simple. Okay, so this is why I do my fundamental review on here. Now, if you're watching this for the first time, what we do is we get a notebook, right? And we write up here, you can write trades, you can write economy streams, you can write currency streams for your title, whatever you want, okay? Below that, you're going to write strong, weak, and neutral. Now, I know logically you're going to think, well, why is it not strong, neutral, and weak? It's because what you're going to do is you're going to write down the economies which are strong, the economies which are weak, the economies which are neutral. Once we've established which ones are which, you're going to cross out the neutral, and you're going to match up a strong economy with a weak economy. That is what gives you, I'll show you. I'm not going to see it on this pair because that's shit. That is what gives you this type of, that's what gives you this type of movement right here. That's what gives you trading a strong economy with a weak economy is what gives you this uptrend, right? Or obviously if it was the other way around, it would give you a downtrend, right? That's the way to fucking do it. When both of them are strong, both of them are weak, or both of them are neutral, that is when you get all this type of bullshit, and there's just no point trading it. You know, have you ever, I say this all the time, but I never know who's watching my videos for the first time. Have you ever looked on a pair and you've said to yourself, fuck, I'm looking for buys, and I'm talking to my mate, he's looking for sells. Now, it could be that, you know, sometimes Lee is looking for sells, my business partner, but he's a scalper. So the market could be here, right, coming down, and Lee's looking for sells, and he's not wrong, right? Because Lee, as a scalper, he's looking to take the market. When this candle closes, he's looking to enter the market here and close here. So he's not wrong, right? Me, as a long-term position holder, swing trader, I'm looking for buys. I'm looking for the market to come here. Then I'm going to enter, and I'm going to let it run away. So the both of us are on one pair, but we're looking for totally different things. Lee's is based on price action, and mine's is based on cold, hard fundamentals and following data, you know? None of them are wrong. You know, it's not that I'm right and he's wrong or vice versa. Both of them are right because they're just different methods, okay? And it's important for you to understand there is 100,000 ways to make money in the market. I don't do these videos to sit here, my way's the fucking best, you need to copy me. You don't. My way simply works very, very well. Lee's way works very, very well. With Lee's way, you need focus and you need to kind of be up trading each day to make it work for you. With my method, you need patience because, you know, sometimes the market might be here, right? And I'm waiting for it to, I'm not even taking this as a sell because that would be counter trend trade and I don't do it because I trade other people's money, right? So I don't do it. I only take trend trades. So I'm waiting the whole time for the market to hit here. Now let's say the market's here, right? I'm waiting 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. I'd be waiting 11 weeks to enter this. You see what I'm saying? However, when you hold it, I'm not even going to bother fucking counting that, but that's a lot longer than 11 weeks, so you can let them run for 10, 15, 20 weeks if you like. That's my method, so I can enter this and I can just get on with my life. I don't have to check the screen every day. You know, I have a very busy life. I'm out all the time. I'm traveling. I'm climbing fucking volcanoes and all sorts of stuff. And yeah, and that's the way I like it. So I like to be very hands-off, right? I just like to wait, sniper shot, and away we go, okay? So, without any further ado, let's get cracking on with our weekly fundamentals. So, as you know, if you're someone who follows these videos, I always do one economy / currency at a time, except from AUD, China, and New Zealand, okay? And it's because they're all closely correlated. What you want to do is you want to look up here and make sure that that says this week. So, because we're in Sunday now, that's actually going to show me this up and coming week. So what you want to do is you want to go back. If you're doing it on a Saturday, you want to make sure it's obviously from last week, from this week, sorry. And if you're doing it on a Sunday, you want to make sure it's from last week. So, what do we have last week for NZD? Now, we, of course, just to highlight this, we don't trade Chinese currency, right? The Chinese yuan renminbi. However, China is very closely correlated with AUD and NZD, okay? If China does well, AUD does well, and so does NZD slightly. If China's doing bad, AUD, i.e. Australia, is doing bad, and it's because of the trade. Shut up! Back! Bisa tutup dia tolong! Sorry, my parrot, I don't know if you can hear that, my parrot's fucking kicking off because the maid hasn't closed his... Bisa tutup dia tolong! The maid's not closed his... he goes nuts at night time. If you don't close his blanket, he starts fucking kicking off. And it's annoying when you're trying to make these videos. So where are we? Yeah, so if China does well, like if manufacturing and everything comes really well in China and it starts going up, well, what do they need to do? They need to buy more shit for the production line. They need to buy more nickel, tin, copper, iron, steel, blah, blah, blah. So if manufacturing in China is going up, you already know, thinking ahead, Australia's going to go up because they're going to start buying all the stuff from Australia. They know it's very, very simple. There's more to it, but you don't have to know the more to it, you know. It's dead simple. Loans. So why is loans going up a good thing? Because if the banks are loaning out more money, it means more people are spending more money. And if you're spending more money, what are you doing? You're stimulating the economy. If you're stimulating the economy, what's that going to do for the currency? It's going to bring it up, right? Trade balance, NZD, that's really high, which is a funny thing. Excuse me. So with trade balance, right, all it is, so you get a surplus, which is this, and you get a deficit, which would have a big minus beside here. So, you know, minus 970 million. So if it has a minus, that means it's in a deficit. All that simply means is a country is importing more goods than it's exporting, i.e. it's buying more shit than it's selling, right? Dead simple. And if it's the other way around, sorry, like New Zealand, where it's in a surplus, it means they're exporting more stuff than they're buying. You know, they're selling more shit than they're buying. That's exactly all it is. So that's a good thing. That's a positive for the economy, right? New Zealand, I mean, the only time New Zealand really kicks off, the things that make the New Zealand currency strong is things like tourism. They export a lot of dairy, so lamb, meat, dairy. I think there's more sheep on bloody New Zealand than there is people, if I'm not mistaken. And that's why, because it's one of their main things, right? It's one of their main exports. What else? And if market sentiment switches to risk off, NZD is actually a risk off currency. So when the markets are going wild like they are now, people will put their money into the NZD because it's a safe haven, right? if you want to find out more about that and learn about that, pardon me, if you want to learn about that in depth, jump across to my 4-week course that I'm going to be doing next week. AUD manufacturing is up, see? Sorry, it's down, however. Yeah, this is very important to share this with you. If you look, previously it was 52.1, now it's 51.7. It has decreased, okay? However, like I always say, that is not bearish, okay? It does not mean weakness. Yes, it shows things are slowing down. However, very simple, when it comes to manufacturing PMI and services PMI, remember this, you might want to take a note, okay? Anything above 50 means bullish for the market. Anything below 50 means bearish for the market, okay? Now, if you see it dropping down from 52.1 to 51.7, that does not mean bearish. Yes, it means things are getting a little bit shittier, so we have to keep our eye on it. But the fact that it's still above 50 means that it is still bearish. It's still bullish, okay? And then we look here. Flash services PMI is 51.4, dropped slightly, but it's still bullish, okay? Credit card spending year on year is the same. Why do we care about credit card spending? It's actually a really good one for the economy. If people are spending more on their credit card, they're simply stimulating the economy. They're spending more money, which means they're going to have to pay the credit card back. First of all, they're buying stuff from shops, right? So they're stimulating their economy. Then they're going to have to make credit card payments with interest. So it's going to grow the NZD current account, okay? So that's why we like to look at credit cards spending year on year. So it's kind of sticky. It hasn't moved, okay? So for me, I am keeping... I had NZD as weak. What have we got? AUD. I also had that as weak as well, I believe. I still think it's weak. Sorry, it was neutral, wasn't it? Yes, it was. It was neutral. My apologies, it was not weak. I had it in neutral because you are seeing a little bit of strength here, but we've got these trade wars coming up, right? And that is going to affect Australia as well because of the relationship to China. Yeah, and that's it. Now what we do is we jump across to next week before we go into another currency, and we have a look to see if there's any news next week that we want to be waiting on. Okay, so we have got AUD, CPI, quarter-on-quarter, CPI year-on-year. Yeah, we love CPI. So some of the stuff that we really love to see is CPI, PPI, PMI, good trades balance, credit card payments, what's the other one? HPI, which is like mortgages. We like to see that. Average earnings, we like to see that. Employment, unemployment, we like to see all of these things, okay? You don't need to really care about every single thing on here. But I've given you a cheat sheet in the group, so you can click on the cheat sheet and it reminds you, right? Just print it off beside you. I think, is that it here? Is this it? Hold on. No, it's not. Sorry. I thought that was it there. Well, there's a cheat sheet in the group anyway. You can print it off, keep it beside you, and then you can look at it, as you go through these, all right? So, yeah, next week is a big week on Wednesday for AUD. All right, so let's have a look at that. And obviously China, we want to see the manufacturing numbers if they have increased. If it keeps going down, then of course it's going to have an impact on Australia. Okay, now if we look here, retail sales as well, it's only month on month. So in terms of showing real strength, you get month on month, you get quarter on quarter, and you get year on year, right? The ones that we really care about as long-term swing traders is quarter on quarter, and the number one is year on year, because that shows real growth or real decline, okay? But month on month, we just like to have a look at it to see how things are churning along in the here and now, all right? Moving on, let's go back. So just to recap, I've got New Zealand as weak, and I've Australian dollar in neutral, okay? Now we're going to turn this off. We're going to do CAD. What have we got? I think last week I actually put CAD into weak because it was bad numbers. Bearish, 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 bullish. It's only month on month. Bearish. Yeah. So for anyone who's new here, we don't just because a currency has, let's say, a bad week, you don't just move it from being strong to weak, okay? You need to see a good couple of weeks of bad numbers, bad numbers, bad numbers, because an economy can be doing really well, and then you just have one bad week, right? Everybody has a bad week in life, economies also have a bad week. So you don't just instantly change it from strong to weak, right? So Canada was in neutral for ages. I kept it in neutral for a good few weeks, and then last week, because of the previous bad numbers as well, the week before, I moved it to weak, and we can see here it is still weak, so I'm going to keep that in weak. Now, another thing that you need to remember with Canadian dollar is that it's very closely pegged to oil. Okay, so if oil's going up and it's really strong and it's flying, the Canadian dollar will get strength and the Canadian dollar will start to fly as well. Okay, so it's very important to remember that. If you're looking at oil and oil's fucking melting, then of course the same thing will happen. You know, the Canadian dollar's going to lose its strength and that's going to start to melt. Okay, so there's a little golden nugget for you. Next week, what have we got? Come on. Federal election, no, we don't really care about that. GDP month on month. Manufacturing PMI. Yeah, so we've got manufacturing PMI on Thursday. I don't know why it's yellow, because that's actually a pretty big deal. But that's really all we have. We don't really have much. Okay, so that's fine. Now we can move on. So just for the record again, I have put Canadian dollar in weak. CHF, I don't know why I check it. You know, it's always the same. It's always stagnant. Why is that? You know, there's nothing here. So the way I like to trade CHF, right, the numbers never ever move. Like, these numbers, they're never enough to actually make the Swiss economy move, right? So how the Swiss currency moves is really based upon, pardon me, what we call market sentiment, right? So 98% of the time, the market is in what we call a risk-on sentiment, because it means people are happy and willing to take risk on the markets, and risk is where everyone makes money, right? However, when stuff happens, i.e. trade wars, geopolitical events like Russia kicking off with Ukraine back when it happened, right? These all have effects on the market sentiment, and when random stuff, unexpected stuff happens, and it has a big effect on the markets, especially like trade wars and tariffs and all this bullshit just now, people are then afraid to put their money in things like USD, GBP, Euro, because they're like, fuck, what's going on in the world? So they're afraid, which means they're going to take the risk off, right? If they're putting risk on the table, they're going to take risk off the table. Risk off just essentially means nobody really wants to take a risk on the markets, okay? That's all it is. It's dead fucking simple, guys. But let's say back when Russia kicks off with Ukraine, markets will go risk on for about a week. Risk off for about a week or two. Then when that war just continues, everyone will be like, okay, this is the norm. This is going to go on for a while, and markets then go back to normal being risk on. Okay, so whenever markets go from being risk on to risk off, what you will see is safe haven currencies will start to fly, even if their economies are dog shit. Safe haven currencies are Swiss franc, Japanese yen, NZD, and assets like gold and silver will start to fly. Okay, that's why gold's fucking rocketing right now. But CHF has also been flying. Japanese yen has been showing strength, even though the economy's completely fucked. There is no strength in their economy whatsoever. Well, why is it going up, Ryan? Yeah, it's going up because of the market sentiment. Very important to understand that, guys, because you can catch some really good trades if you understand market sentiment. And not only catch some good trades, you can avoid taking some really fucking bad trades, but trades that you think, oh, that's going to fly, and then you enter it and it melts, and you're like, why did it melt? Because you traded it based on economic fundamentals, which is absolutely fine, but you forgot to ask yourself the question, are we in a risk-on or risk-off sentiment? And that question, asking yourself before you enter the trade, would have had a very different outcome whether you took the trade, whether you just said, I'm not going to bother trading this, or whether you took the trade but in the opposite direction of what you previously thought, okay? So it's very important to understand market sentiment. Again, I'm going to cover all this in depth in my course if you guys want to join it, all right? So for me, I always put CHF in neutral. I never ever take it out of neutral, and it's because I only trade it when the market changes sentiment, i.e. risk on, risk off. Okay, that's it. That's the only time I trade it. CPI next week's not going to do fuck all. Unemployment rate, yeah. You know, nobody really cares when it comes to Swiss franc. Sorry, we've done China. Let's have a look. What's that? No, this week. Okay, let's have a look. I'm just going to fly through it. Bearish. Look, because it's below 50, right? Below 50 is bearish. Bearish. bearish, 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 bullish. Nah, we don't care about that. Nah, we don't care about that. Okay, so you can just see, look, it's the whole thing's fucking bearish, right? It's totally bearish. So I have got euro in weak. Because I previously had it in neutral for a while, but it gave us such weak numbers for a long, consistent period of time, I then switched it over to weak. When it comes to unemployment stuff next week, we've got Spanish unemployment here. When it comes to reading euro data, excuse me, we don't really care about Spain and Italy. What we really care about is Germany and France. Okay, so bear that in mind. We will have a look at it if it's a year on year like this. Look, Spanish flash CPI year on year. We'll definitely take a look at it. But it's really Germany and France that move the euro. All right. Next week we've got tons of news for the euro. Tons of CPI, GDP, PMI, manufacturing. Unemployment. Yeah, we've got tons of news next week, so let's keep our eyes peeled on that, okay? Moving on to pound. Public sector net borrowing, 16.4 billion, so that's bearish because it has massively increased. Flash manufacturing, bearish, bearish. Now, again, every single country has manufacturing PMI and every single country has services PMI, okay? All of them. But not all of them are manufacturing countries and not all of them are services countries. So, for example, in the UK, we don't manufacture anything, right? We might have the odd little thing, but we're not known as a manufacturing country. Like Japan, manufacturing country. Yeah, everyone knows that. Germany, manufacturing country. China, manufacturing country. Everyone knows that, right? The UK... we are a services country. France, a services country, and so on and so forth, all right? So, for example, if we're in a services country, like GBP, we want to see that above 50. And if manufacturing's not above 50, we don't really mind, because we know we are not a manufacturing country, okay? However, sorry, my mouth's watering like crazy here. if we do see manufacturing and services both above 50, happy fucking days, right? That's absolutely fantastic. So yeah, look, bearish, 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 bearish. Now look, this is why it's important to know how to read and interpret this, right? Some people that don't really know, they'll just look at that retail sales and see, oh, it's green. They'll see that the numbers are all different, right? But they won't know how to interpret these numbers. And they'll just look at the colour green and be like, oh, that must mean bullish because it's green. You know, no, it doesn't. Look at previous. It was 0.7, right? Now, the analysts, the bankers and all that, they forecast it to come in really fucking low at minus 0.3%. And it's come in higher than expected at 0.4%. So that's much, much higher than they forecast, right? So that's why Forex Factory have made it green, because it's came in better than expected. But if you look at the previous, look down here, 0.7, that was 0.4. It's came in far, far less, which is not good. So that's bearish, okay? So don't get caught out with the fucking colours being red and green, all right? Moving on, next week what we got? Final manufacturing PMI, money supply, nationwide HPI. So we do look at that. That's just mortgages, but it's month on month. Mortgage approvals, we do look at that. Net lending to individuals, we do look at that, because if the banks are lending out more money, what's going to happen? It means that more people are getting more free money from the banks, and more people are going to buy more shit, you know, because every time you get a bank loan, it's to go and do something, right? To get an extension put on your home, build a garage in your spare room, buy a new car, take your family on holiday, blah blah blah, right? So it stimulates the economy. So if net lending from the banks to individuals has increased, then that's good. It's like, okay, that's a positive, but of course you need to you need to then piece all this data together. You know, you can't just look at that one thing and be like, well, that's flying, so that must be strong. You know, you need, that's the thing, you need to put you need to put unemployment here, employment here, CPI here, PMI services. You need to put it all out and be like, right, overall, that's bearish, okay? Overall, this is bullish, and then you match these pairs up. So that's strong, that's weak. I'm going to match those two economies up, and that's how I'm going to select what I'm going to trade, and also which direction I'm going to trade it. Am I going to take it fucking short? Am I going to take it long, right? Yeah, so we've got a little bit of news we want to see next week. I'm keeping GBP in week. I think I changed it to week last week. Moving on, we have got two more to do. Japanese yen and USD, guys, and that is us done for the day, alright? I hope these videos are useful for you. BLGC. One thing I want to say before I cover this, see when you go through this, right, you might be sitting there as a newbie and thinking, fuck, I'm never going to get this. I swear to God, I always looked at fundamentals. I fucked them off for years. I thought, I can't be arsed learning this because it is a lot of work, right? And each year I was trying to get better. And about 2 years ago, give or take, I was like, do you know what? The only thing I haven't bothered to learn trading, because I was already profitable without knowing this stuff, right? But I was trading in the 1 hour time frame and in and out in the same day and blah, blah, blah. It's like the only thing I haven't learned is fundamentals. And I done a course with my mate, Dan Emerson. The guy's an absolute brain box, fucking genius with all this stuff. He explained it super, super simple. His previous profession was a teacher, you know, so he obviously naturally had that ability to teach people in a way that most people would understand, you know, because you get different, you know, people learn different ways. And it was honestly, after I had learnt fundamentals, I was just like that. I can't understand how I've traded, you know, for 7 years at that point, or maybe even longer, 8 years, whatever it was, and have never bothered with fundamentals. You know, I just thought, you fucking idiot, I've left so much money on the table by not bothering to learn this. It's just insane, you know. Anywho. Japanese yen, Bank of Japan core CPI year on year. It's stagnant. Look, it's sticky. They thought it was going to increase. It hasn't. It's sticky, so that's bearish. Bearish. Flash manufacturing PMI. You know, it's bearish. Came up very slightly, but still was anticipated, and it's still 48.5, which is dog shit. That's bearish. Territory industry activity bearish. SPPI year on year bearish. Again. I think that is, let me just check, is that mortgages? Greater forecast, blah, blah, blah. Change in price of services purchased corporations. Okay, no worries. SPPI, look, don't be fooled that it's green. They thought it would come in worse at 3, and it's came in at 3.1, so it's came in better than they forecast, and that's why they've made it green, okay? Don't just look at this and think green means bad or red, green means good or red means bad, okay? You need to look at the previous as well, and is it increased or decreased? Very, very simple. Tokyo core CPI year on year has massively increased, so that's a good sign, you know? That is a good sign. However, in case you're thinking, excuse me, in case you're thinking, well, how the hell can core CPI be way up, but the rest of it's all shit? Well, it's because if you remember back in November time, right, the Bank of Japan were like, how the fuck are we going to get this economy up? You know, our economy is absolutely Barry White, okay? So one of the ideas that they had, and they implemented it, was to increase everyone's salaries. So what happens if you're at your job and you go from making 21 grand a year to all of a sudden making 29 grand a year because you got a raise? You're not just going to be like, happy days, I've got far more money that I can bang into savings. Are you fuck? The first thing you're going to do is, I'm going to change this shitey Vauxhall Corsa for a fucking Audi TT, you know? You're going to buy more shit. If you're making more money, you're going to spend it on more shit. We've all been there, we've all done it, it's just the way they are. That is why they call us consumers, because we are fucking spending termites, right? We consume everything that fucking moves. So the reason why this has increased is because back in November, the Bank of Japan, in order to try and stimulate the economy growth and get things running again, because they weren't getting it from manufacturing, which is their main bread and butter, and I'm pretty sure nobody really wants to buy fucking samurai swords anymore, is they increased everyone's wages, and it really did work. As soon as they increased people's wages, retail sales went up, credit card spending went up, you know, employment went up, unemployment went down, so it really does have a positive effect. But these type of implementations to make things like the economy better. It's kind of like putting a plaster on an artery wound. You know, if you haven't clogged the fucking artery, i.e. fixed the gap of manufacturing and tool production and blah, 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 then you're just really covering an artery bleed with a plaster. Yes, it's going to look good in the short term, but in the long term, you're still going to be in the hurt locker, right? As you can see from these numbers here. So that's kind of how it's working, guys, okay? This week we have retail sales year on year. Housing starts. So housing starts just like new build homes. We like to see that as well, because if they're building new homes, then it means, you know, the bank are funding that, or someone's funding it, right? And then people are then going to get mortgages to buy those new homes and blah blah blah. So it's seen as a good thing to stimulate the economy. Final manufacturing PMI, we still think that's going to be terrible. Bank of Japan policy rate. So there is not a rate increase or decrease penciled in. Bank of Japan press conference, unemployment rate. Yeah, we want to see all these things, all right. So, excuse me, I'm putting Japanese yen in weak. Now, for last, but by no means least, USD. I know we've got all these trade wars, tariffs, and blah, 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 cut on, guys, but the USD economy is fucking strong. The numbers don't lie, you know. One thing to not do, and you will stop doing it once you learn how to read fundamentals, right? See, being able to read this as fluently as me, it takes you doing this 4 to 6 weeks. Now, the way that I learned when Dan was teaching us, right? Dan would post a video like this every week for us to watch. Now, so what I used to do, maybe kind of week 3, Dan would post, when I would post this on like a Sunday, what you should do, and it's what I done with Dan, when he posted his on this Sunday, I would do one of these reviews myself on the Saturday, and I would sit down, I would make notes, you know, I'd write a notebook out, I'd write notes, okay, I think USD is weak because boom, 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 I think GBP is strong because boom, 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 you know, and I would write it all down. Then on the Sunday, I would then watch Dan's fundamental review, and that was to make sure that I was actually learning it and not just watching it on a Sunday, practicing mine on a Monday, and then it's like, well, I'm just copying him because he's already told me the bloody answers. You know what I mean? So it's a very hard, when you do it that way, it's a very hard way to understand, are you actually understanding it and you actually getting it or not, okay? So if you practice this, honestly, if you do this for 4 to 6 weeks maximum, you will be able to read this off as fluently as myself and just boom, 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 smash it out, honestly. And if you looked at the timer here, you know, we've been at this for 37 minutes, bearing in mind, like, I'm making this a video, I'm giving you answers, I'm giving you explanations. When you're doing this yourself, it takes 15 minutes, because you just simply jump on a pair and you're like, bullish, 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 bearish, bullish, bullish, okay, USD strong, bang, next one, you know, you're straight on to it. So don't think to yourself, fucking hell, I need to do this 40 minutes every week. No, you just do it 15 minutes to yourself, okay? So let's have a look, let's crack on and get this done and dusted. Bearish, bearish, bullish, 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 you know, look at the United States. If you look at the news and Instagram and all this, oh, the markets are crashing, this is happening, fuck off. This is all that news stuff is to get idiots that don't know what they're talking about to go the opposite way, to go the wrong way in the market. I'm telling you, once you start looking at cold hard fucking data doesn't lie. People that post bullshit news lie because they want you to trade the opposite direction so they can stop you out, take your fucking money. Unemployment claims 226, that's bearish because unemployment's went up, so that means it's bearish. Durable goods, bearish, bullish. Existing home sales, bearish. We don't care about that. Bullish. And inflation expectations came down. Let me see that. Should that be bullish or bearish? See if you ever forget one. Like something, you know, you're not a human being. Sometimes you're like, fuck, is that thing? It tells you that actual greater than forecast is good for the currency. Okay, so that's not greater than forecast, so that's bearish. But overall, look, the key components here that we want, look, bullish, bullish, bullish. The main ones here, bullish. You know, there is a couple of bearish. Yes, I understand that. That will be to do with the trade wars, but I'm telling you that the main bad boys here are bullish, okay? So I'm keeping USD in strong, all right? And let's see what we've got next week. And that is us wrapped up. Oh, next week is NFP week, non-farm payroll. Fantastic. So you know, even though NFP is at the end of the week, guys, it's on the Friday. It's usually a pretty spicy week in terms of USD pairs. So you need to take it into account. This is a spicy week. We've got jolts. Jolts is spicy. Unemployment, advanced GDP, core PCE. That's spicy. Unemployment claims, final manufacturing, blah blah blah, average hourly earnings, non-farm payroll, unemployment rate. This is a spicy fucking week, guys, for USD. Then you need to add to that the spiciness from the tariff and trade wars. Okay, so yeah, just be careful if you're trading USD. You don't have to be fearful of the market, but remember your risk management. Don't over trade, don't over risk, blah blah blah. Okay, so it's going to be a spicy week. That is it. So. Just to recap, guys, strong, I only have one currency, USD. Weak, I have NZD, CAD, Euro, GBP, and Japanese Yen. Neutral, I have AUD and CHF. Okay, I'll read it one more time. Strong, USD. Weak, NZD, CAD, Euro, GBP, Japanese Yen. Neutral is AUD and CHF. However, when it comes, this is important, I have to tell you this. Although we're saying CHF is neutral, Japanese yen is weak, okay? Remember, and NZD is weak, if trade wars and all this stuff and all this becomes, violent numbers during this week, the market will remain risk off, okay? If the market remains risk off, what does that mean? That means you will see strength in Japanese yen. Even though the economy's fucked, you will see the Japanese yen currency-wise rising, okay? And CHF, you will see rising. NZD, potentially, you will see rising. Gold, you will see rising, okay? Higher highs. So bear that in mind, okay? Even though I've got some down as weak and neutral, you need the context, okay, of the whole big picture. All right, guys, so I hope these videos are useful for you. If you would like to learn, I know I give a lot of information here, but giving information is very different from giving knowledge. And it's not that I try and hide the knowledge from you. It's simply because, we have guys who are paying for mentorship, daily education, taking our trades, blah, blah, blah. It's not fair if I just give everything away for free when these guys are paying for it. It's just not fair on their students. And yeah, if you want to jump across for the full 4-week masterclass, it's going to be every single Sunday starting next week. I'm going to be doing it over in my new office with the big interactive TV. I'm going to be covering every single fucking thing you can think of in the markets over the next 4 weeks. I will give you some homework, mild homework each week for you to go away and practice. Each video will be recorded. You will be given the link so you can save them. You can continue to watch them as many times as you like. And after the course, I'm not just going to fuck you off, of course. I'm not an arsehole. If you hit me up on any of the platforms, if you mail me on Discord, if it's Facebook or Instagram or whatever, and you're like, Ryan, I was on your course last week, I was doing this, blah, blah, blah. I've worked out, USD Japanese yen sells. This is the reason why I think it sells. Can you just tell me, would you agree with me or not? And I'll be like, yes, mate, I agree with you, and these are the reasons why. Or, no, mate, I don't agree with you because you've got the economics of it absolutely spot on, but you failed to remember that the market sentiment is risk off. And you'll be like, shit, that's right. I'll help you all the way, guys, right? I'm not a dick. I'm not... And it's not a recorded video where you're just going to pay for the course. I'm going to send you a bunch of bullshit recorded videos. You sit there and watch it. Death by PowerPoint. You can't ask any questions, which is one of the main things in trading. You can watch as many fucking videos as you like, but you need that mentorship. You need to be able to ask questions in order to learn, okay? Because it's just, everything's just such a wide fucking spectrum when it comes to trading, okay? Nothing is ever black and white, all right? So, thanks for watching. I'm Ryan Mack. Much love. This is Trading Guys. I hope you guys have a great week. Remember, it's a very fucking spicy week coming up on top of trade wars and tariffs, blah, blah, blah. Manage your risk. Don't overtrade. Don't over-risk. And if you're on the charts and you don't see your setup, don't fucking trade. Just walk away. Wait for your setup to come. Don't think you must trade today or you must trade this week, right? Sometimes I wait for 6 weeks and I don't bother taking a trade. I sit there like a fucking sniper outside Saddam Hussein's house, waiting for him to pop his little fucking head up, all right? And then I take the shot. So, yeah, I'm Ryan Mack. Thanks for watching. Have a great week.